Is this the day we've been waiting for? We've got the FOMC meeting just hours away. We'll be covering it live on this channel. Make sure you have turned your notifications on. You can see here the markets are all but pricing in 25 basis points. But in this video, I'm going to explain why this particular FOMC meeting is not so simple and why it's super confusing and has got many of the specialists and experts really confused on the outcome as well. So we're going to need to spend some time understanding exactly what to expect because it's a little bit counterintuitive. Now you can see initially earlier in the week the market more and more, so about 30% of the market was pricing in a pause. Now you're starting to see that unwind in the few hours leading up to the FOMC meeting. This is now drawing back with the majority of the market expecting 25 base points. Now this is normally a good sign, right? Normally what this would say is, okay, market's expecting 25 base points, they're pricing it in, so if we're to get a surprise pause, then that's going to lead the market to rally, right? Surely. Not so simple, not so simple. If we get a surprise pause, this could mean that the market has more problems than we're being led to believe. This could indicate, and this is what markets are worried about, that if Jerome Powell comes out and does this surprise pause, that maybe things are really starting to break and he's having to slam on that emergency brake and people go, oh, hang on a second, this is bad. Things have really hit the fan. We need to, what's going on? Right? So this is why that pause may not necessarily be a good thing. Now there's a caveat to add on top of that. That is for the traditional markets, right? The traditional markets will not react well. But Bitcoin could very well react positively to that breaking scenario. The emergency pause could be a positive for Bitcoin because remember, we've been talking about this argument of hyperinflation. You've seen the big Balajis bear, you've seen many leading economists now talking about this. You can see here that the US has started to turn on their money printer, right? This is their whole policy going all the way back to 2003. Let's zoom in a little bit here, and you can see that they've done their 300 billion worth of purchases again. This was all QT from the top. They were tightening, and now they've started loosening. And remember, Bitcoin's a function of liquidity. If money is being printed, that is really positive for Bitcoin. Fantastic. But we also know there's this huge narrative around hyperinflation. And I was studying this a little bit more because initially when I was reading Balaji's bet, I was like, hang on, where is he getting this from that suddenly you're going to get this hyperinflation out of nowhere? Remember, hyperinflation is designed as 50% inflation per month. We're talking US is sitting at 6% per year. Right? If we take a look here, you can see the US is sitting at 6% year on year on the headline inflation, right? It's coming down, but it's still sticky at 6%. How do you go from 6% per year to 50% per month? And so if you start studying this, and this is the Hung K. Cruz hyperinflation table, which I found that Balaji shared, and we went into this and you can see the data. It's from cato.org, so definitely head over and look at this. You start to see how crazy and how quickly this can jump up on you. So if you look here at Hungary as an example for here, it took 15 hours for prices to double. Right? They had 207% daily inflation. If you go down the list, maybe it's not going to be that extreme for the US dollar. But even if you look at something like this in Taiwan, when they had an effective inflation rate of 1.3% per day, it took 51 days for the price to double. So this is what people are raising the alarm about. If the US get this catastrophically wrong, which is in other words, what they're doing is they are increasing their purchases despite inflation being at 6%. This could lead to the debasing of the US dollar. They're going to save out the banks. They're going to say, oh, we've got infinite money. We're going to protect all these banks. But it will have to be done at the expense of debasing the dollar. And that is where you're seeing these crazy projections of, oh, Bitcoin could go to 1 million in 90 days. Now, do I subscribe to the million exactly as a number? No, not necessarily. But the premise that Bitcoin can have a crazy run up, I agree with. Right? We've always said that we're looking for this Fed pivot. We said that throughout 2022. But we've got Christmas, New Year's, everything rolled into one because what's happened now is not only are we just getting a natural Fed pivot, it's not a natural Fed pivot. We are not pivoting right now because inflation is at 2%. We are pivoting despite inflation being at 6% because the banking sector has started to deteriorate. This is really good for crypto, which is acting as this, defensive asset which people are flocking to in times of difficulty. This anti-hyperinflationary bet. So this is really important. This is why you need so much nuance going into the FOMC meeting because it's not very straightforward. There's every possibility that when the data comes out, that we could see that the stock market moves in one direction, we can see Bitcoin moving in the other direction. Now, I wouldn't be surprised to see if NASDAQ does well on the data around loosening, if we get a surprise pause, maybe, but I can definitely see the Dow Jones and the S&P fall significantly because it's going to give fears around some of those banking sectors. Now, incidentally, in the last few hours, we've got other data. These are the last bits of data that kind of comes out before Jerome Powell has to make his decision. UK inflation rate breaks a 3-month stretch of declines. It was declining for the last 3 months. Boom, straight back up to 10.4%. Again, this may get Jerome Powell worried because he's been relying on this coming down, down, down. Now, agreed here, we have seen the US do a lot better than UK and Europe in terms of bringing inflation down, but it's still at 6%, guys. It's still high. This is nowhere near the 2% target, and this is still sticky, entrenched inflation. Also, Europe pushes higher as ECB chief Lagarde came out this morning, and she didn't mince her words whatsoever as well. She came out and said, with high uncertainty, it's even more important that the rate path is data dependent. She says inflation is still too high. So this is a narrative you're getting in UK, in Europe. Now over to Jerome Powell later today to decide on what he wants to do and how that's going to move the market. You can see fear and greed index is sitting at 62. Markets are feeling quite comfortable, and I do not blame them. If you look here on the Bitcoin daily chart, you are sitting here at 28,200. What a lovely level. Right? What a nice level for Bitcoin to be at. It's not even come back down to retest where my cursor is at 25,000. I've mentioned in previous videos that I'm perfectly happy for that to do so. If the FOMC meeting causes for us to fall down towards 25,000, I'll be more than happy to personally buy the dip at those levels. I will do so. Now that reminds me, BYBIT sent me a message to share with you guys, and what they've got here is they have now listed Arbitrum. So this is one of the first derivative platforms where you can go ahead and you can deposit your Arbitrum if you've received some from an airdrop, but also there's a whole bunch of things for you to win as well. So deposits are now open. On March the 23rd, they will list the ARB token officially, and you can start withdrawals if you need to from the 24th, which is 2 days from now. Now, interestingly, event one is if you deposit 250 ARB, you're going to earn 25 USD straight off the bat. There's also a launch pool, so you can stake ARB and earn a share of 150,000 ARB pool. And then there's also a GMX user exclusive deposit of 500 ARB to earn 0.5 GMX. Definitely go check these out, see if any of these, there's another one here for spot as well. Go check these out, see if any of these are useful for you, and they're exclusive. BYBIT being one of the first, I'll leave the link in the description, to list Arbitrum. So if you were lucky enough to get some of those airdrops, then definitely take advantage of those links there. Jumping back into the chart, we now need to look at where is support and where is resistance going to come from. We know support is around that 25,000 mark. I want to keep my mind focused on this big yellow line here to say 25. If we drop back down, that's a very, very important support level for us to come back down, retest, and then bounce onwards from there. To the upside, you guys can see very clearly where our chunk of resistance lies, and that lies on this piece here. So anywhere between where we are now, we'll start to face resistance from 28,000 all the way to the top side of 32. So do not be super gung-ho. I certainly would not be chasing green candles right now because you're buying into a clump of resistance. Now, if you're able to clear this resistance, the next jump up is quite significant as well and brings you up towards 37. Okay, so you can see here how we fell very quickly. This gap can be filled very quickly as well. So if we come and zoom out, what I do want to show you here, this is a very important support level, which is around 29,000-30,000. Do not underestimate this. Not only did we fall here in Jan of 2021, but also in summer of 2021, we then held various supports throughout May of 2022. This horizontal line where my cursor is right now, you can almost turn it into a rectangle as well, is a very important cluster. If I bring out the VPVR as well, I do want to show you that you can see volume does start to come in here to defend the price. We're currently trying to push through areas where there is thinly traded volume. See these candles here? These are thinly traded, and we knew that. We knew once we broke from the 25,000 level, things are going to gap up quite quickly. We could see that the volume was low, but now the volume's going to start coming back in here. So don't expect 28 to 32 to be super easy, because there is a little bit of resistance here. But once we break through that, I think things can get a little bit easier again to fill the gap up towards 37. So I certainly want to be chasing, but if we can break beyond there, then that's going to be really exciting for the Bitcoin price. Another way to look at this is to look at the daily EMA ribbon, and you can see here on the daily EMA ribbon, we're very extended, which is a good thing, but also you do want a little bit of a calling off, and a calling off will look where it coincidentally brings you to is 25,000, and that's not a coincidence whatsoever. We know that is important support, and I'm perfectly happy with the Bitcoin price coming down to 25 if it needs to collect some support from the daily EMA ribbon and then bounce for its next move. That doesn't necessarily mean it's going to happen, but it's a good thing if it does that. Similarly, if we come up to the weekly chart, same thing, right? We're opening up another nice weekly candle here this week. We've still got 4 days left of this weekly candle, and of course, the FOMC meeting later today will set the direction for this week. We can easily turn this candle red for the week, but equally, we can turn it very powerfully green for the week as well. So we do want to watch this, and again, over the long term, it doesn't really matter if it wants to come back down and test its EMA ribbon. That's perfectly fine as well. But for the short term, I do want to see us keep this momentum running into that chunk of resistance between 29 and 32. On the 4-hourly chart, let's take a look at our ascending broadening wedge to see how we're getting on here. We got a nice breakout to the upside. And now again, you just want to see, does it want to come down and retest, or is it going to fizzle out a little bit? The last thing you want is for this to just start fizzling out, creating lower highs and lower lows and downtrending. That is not what we want to see. What is better is come back, retest the top of the wedge, and boom, off it go for a higher high and keep its move heading to the upside from a technical perspective. Also, a pattern worth looking at is the channel, right? This is the channel which we're in. We'll look at it on the daily. It's a little bit easier. Same thing. We've broken out from the channel. You don't want this to fizzle out. Come back down, have a retest, even if it's at 26.7 there, and then go push onwards. These are perfectly healthy technical breakouts. Breakouts do not happen that you just break out and you go boom like this. No, that's not how it works like this. Boom. Maybe you go create a higher high, higher low, higher high, and eventually you'll get to your price target, right? That's how you want to trade a move like this. Of course, we've still got our bearish pattern as well playing out, which is our rising wedge on the 4-hourly time frame. So be very cognizant of this. You're starting to see the RSI just call out ever so slightly. I mean, if you were to take a line here, you technically do have the highs creating lower highs here. So just be wary of that. That's called a divergence, right? Again, in my TA course, ijaz.uk/TA, completely free TA course, we spent ages, lectures in there talking about divergence. When the price is going up, you got the price going in this direction, the RSI going in the opposite direction, normally indicates that the price is likely to go sideways for a little while, or maybe even curl over to the downside. So that's what I'm looking at here on Bitcoin. But of course, when you've got a fundamental catalyst to layer on top of that, which is the FOMC meeting, then that takes precedence. So yes, we're looking at this from a technical perspective. Can we fall? But keep in mind that the FOMC meeting could provide some support. Now, it's important to remember it's not just about the rate hike today. Yes, there's going to be a 25 decision or a 0 basis point decision here, which is a pause. Now, many people need to remember that just because Jerome Powell pauses, it doesn't mean he commits to a pause. A lot of people making the assumption that if Jerome Powell pauses, then he's going to stay at this rate hike and then he's going to start cutting rates. No, not necessarily. He could pause just to stop the panic, and then he could do another hike and start going back to 25 basis points at the next meeting. I've not seen many people talk about that. The other thing we need to look to is the press conference. We will live stream the press conference together as well, because he could give 25 base points, but give us some clues about when he's going to pause at the next meeting or the one after that. So we need to listen to him to see if he comes out dovish and sees how that plays out as well. We also have the summary of economic projections. Go watch my video from yesterday where I break down what to expect from there. We're going to look at the GDP bit. We're going to look at his terminal Fed funds rate as well to get some clues. So we've got to look at all of that together later on today. It's not going to be as simple as just 25 base points or 0 base points. There's a lot more intricacies involved in that this time round. Thanks for watching, guys. Smash up likes, don't forget to subscribe, and I'll see you in the next one.